Hey guys, what's up? This is Francisco with Valorizo Capital, and on today's video we're gonna go through the market update video. We're gonna analyze the information that we received from the market last week. We're gonna take a look at what happened. Remember that it was a short week due to Thanksgiving and also due to the half day that we had on Friday. Remember that next week is going to be a very important week since we have the beginning of December. We're probably going to see a lot of volume coming into the market given that we have the last trading days for the month of November and also the first trading days for the month of December. So I think it's going to be a pretty important week. We're going to take a look at many of the charts that I want to show you. We're going to take a look at TLT, TNX, and also the UUP. And we're also going to take a look at one very important chart that is right now here in my screen, which is BBIX, which is you can consider BBIX kind of as the VIX of the VIX. I'm going to share what is the importance with that, and then also what is my analysis of the chart at the moment. Also remember, guys, that this information is just for informational purposes only, and is based on my personal opinion and is not financial advice. So right now that you're here in the channel, remember to like and subscribe, and also to share this information with some other fellow traders so that they can use this as an asset for their trading business. So let's start right here with the BBIX. This is actually a pretty important chart, and basically the BBIX, what it does, it actually calculates the volatility of the VIX. So you can see this as the VIX of the VIX. Remember that the VIX calculates the volatility in the options for the S&P 500. So you can see the BBIX as doing that for the VIX. So what I have found is that the BBIX tends to set up way before the VIX, and usually the VIX tends to set up before the market. So this can give you a couple of days, if not weeks, ahead of what we can expect of the price action in the market. So I think this is a very important product. Remember that as anything in the market, you have to watch the information that you're receiving for this product, but ultimately all your trading decisions have to be relied on the price action that we actually see in the market. So always remember that. So let's start here with the analysis. Let me just grab my drawing tools pretty quickly so that we can start with this episode right here. So let me show you what I'm seeing right now. So what I'm seeing right now, of course, as you can see, and many of you have that are visitors regularly for the channel, you know that whenever I have this signal right here is a sell signal, which is the red line in my chart. That means that the trend oscillator is trading below the midline and that we are also trading below that 200 hourly moving average, which is the pink line in my charts. So as soon as we have that, I knew that the BBIX was probably gonna trend to the downside. You see that we had a pretty strong move all the way to the downside. We also had a squeeze, which is a very important aspect of my trading. We had a squeeze, we had a very strong move to the downside. And you can see right here that the BBIX continues to show resistance at that declining 200 hourly EMA. This is actually my favorite moving average in the entire market. You can say that the 21 exponential is a close second, but the 200 hourly is such an amazing and accurate moving average for basically anything that you use in the markets. Most with cash session instruments, I haven't found a very important use for this 200 hourly moving average in future contracts, but for anything that is cash, meaning the SPY, the QQQ, IWM, DIA, BBIX, UBXY, it tends to be really accurate. So back to the chart, what I'm seeing here, I'm seeing that we're seeing a lot of resistance at that 200 hourly moving average, and I'm also seeing that we're seeing resistance right here in the trend oscillator. You can see the resistance that we have here, and I'm also expecting, if we happen to move a little bit above in the BBIX, I'm also expect to see some resistance in that trend oscillator. So that means that even if we see a little bit of pop in that BBIX, I'm still looking to see that probably that declining 10 week, which is kind of the same as the 50 daily moving average, to act as resistance, and also that trend oscillator. So what does that means, right? That basically means that I'm super bullish in the market, and even if we see a little bit of pop in the volatility, I'm expecting that pop to be contained and that we continue to see more rally in the indexes. I'm not expecting that to happen right now, but that's something that we have to take into consideration. Also, you can see here that the BBIX was trending lower, making lower lows in price, but the trend oscillator is starting to make higher lows. That doesn't mean that we're going to see a massive change in the trend in the BBIX, but that means that we might see some turbulence, as you can put it, in the markets, but I'm expecting that to be contained. So that's what I'm seeing here in the BBIX. But remember that this sets way before the VIX, so that doesn't mean that we're gonna see that right away. We're probably gonna see it in the second week of December, or we have just to take it day by day. If we take a quick look at the VIX, and let me just take these price alerts out of the way. You can see in the VIX, right, just the VIX, that we have the same. You can see that we have a sell signal that is active. You can see that we're breaking down in the trend oscillator, and you can see that we're breaking down in price. We're trading below 22.37. So my expectation going into next week is that we're probably gonna see a trade lower all the way back to the lows of August. So that's my expectation for next week. I still think that the market is going to continue to rally to the prices that we have been talking about, and we're going to review these prices in this video, but that's what I'm seeing right now in the market. Let's take a look at the chart that I mentioned, which is the TLT, TNX, and UUP, and this is just beautiful, right? Remember that bonds tend to start changing the trend before the market. So actually what we're seeing right here in the price action of the TLT is actually pretty bullish. And why I'm saying that is because you can see that the TLT has been on a downtrend, pretty strong downtrend for an entire year, but we actually had a pretty strong move to the downside recently from August all the way here to November. This was a pretty strong trend to the downside. But what is different right here? What is different, you can see the price action that we had right here, right around that 200 hourly moving average. You can see the price pop above that moving average, it start holding that moving average, and you can see that we had the squeeze, and then we started to see the trend oscillator started to climb until now we're back above that midline. We're back above that midline, we're back above that 200 hourly, which is why I have a buy signal in the TLT. And remember that the TLT is a very shorted instrument seen in this market because of what is happening with the tightening that we're seeing in the Fed. So this move can really continue to move to the upside. Of course, we have to take into consideration that this has been a really strong rally from below. So maybe seeing some kind of pullback back into this 101.45 level is a possibility, but as long as we continue to hold price above that level, continue to hold that 21 exponential, I'm expecting for more upside in the TLT, which means that I'm expecting for more downside in the TNX. And remember that the TNX is what is tracking the interest rates in the market, right? So remember that most of the times the market is actually pretty efficient. Even though people tend to say that the market is actually not efficient, the market tends to move way before the Fed actually makes a decision public. What I mean is that the market tends to know before the Fed when the Fed actually has to pivot or change the rates. These rates start moving way before the Fed start raising rates. So always have that into consideration. And now we're seeing, based on price action, that the TNX is starting to break the bullish structure. So remember, what is bullish structure? Basically, bullish structure is when we have the trend oscillator way above the midline, and we also have price above rising moving average. We have price above the 50 hourly, the 21 exponential, 200 hourly, and the 10 week. So that's basically an uptrend, just keeping things pretty simple. We have that uptrend, and now price is breaking below that uptrend. You can see that price right here is below all moving averages that I watch. We're also below that 10 week, which is again the same as the 50 daily moving average, which is the purple line right here. And you can see that the trend oscillator is below the midline. And we also have a squeeze that is firing to the downside. So my expectation is that the TNX will continue to trend lower, at least in the short term until we test these highs right here. So you can call these highs. Let me just see the exact level for these highs. And you can see that this is somewhere around 3.491, right? The high right here is 3.483. So consider that as a possible level of support for the TNX and therefore a possible level of resistance for the TLT. So TNX also looking that is changing trend, and I'm expecting more downside. And then let's take a look at the UUP. And the UUP, we have been talking about this chart and we actually made an amazing analysis on it. I'm gonna probably link that video we were talking about. We were talking about the UUP since the end of October. So I'm gonna link that video in the description and also right here in the video, so you can actually kind of see what was the rationale behind everything that is happening right now in the UUP. And what we're seeing currently is that we continue to trend below a decline in 21, below a decline in 200 hourly, below a decline in 10 week. And you can see that the trend oscillator basically is trending below that 50 line, right? We're trading below that 50 line. We can see that also we have a squeeze that is firing to the downside. So I don't see any reason to think that the UUP is gonna turn before we actually test the 200 daily moving average in the daily chart. So I think that's going to be a really important chart. The level that I'm going to give you is going to be that 200 daily moving average, which is the blue moving average in my charts. And I'm expecting this to actually continue to trend to the downside going into next week. You can also see that we have a gap that we have to fill all the way to 28.14. So I think that's also an important level. And then I think if you have an understanding of what is happening with TLT, TNX, UUP, I think that you have actually a pretty good understanding of what the market might do. But let's take a look at the indexes. Let's take a look at the SPY and let's take a look at the NASDAQ Composite. So the SPY is actually looking pretty amazing. Have a lot of lines going on right here in the chart, but there is actually pretty easy. Just a couple of Fibonacci levels. Let me show you. So this 0618 level that I have right here, which is this yellow line, is just a Fibonacci retracement measured from the high all the way to the low. What happens with that 0618 retracement level is that it's a really important resistance level for the market. And you can see that we got rejected right here, but now the SPY is trading above that retracement level. So that's actually pretty bullish. And you can also see on my indicator that the trend oscillator is breaking out, right? We're breaking out above these levels. You can see the breakout right here. We're breaking out before price, which is actually pretty bullish. And that's one of the reasons that I think that we're gonna close this level, this gap right here, all the way to 410.97 next week. That's actually what I'm looking for. A lot of people have been calling for some resistance at this 200 daily. But if you actually look at psychology, we have a gap here. We don't have anyone here. So if we happen to close above this 200, that is gonna trigger a lot of sell stops, right? We're gonna see a lot of stops hit in the market, and the probability that we're gonna close that gap pretty quickly is actually pretty high. So keep those levels in mind. I think that as long as we continue to hold above this level right here, which is 395, I think that we have to continue to favor the bullish side on the markets. Now, this is a new indicator that I'm using. You can see this gray line right here. And this indicator is actually just the volume profile that you can find on TradingView. So basically what I did, and I can do it with you here pretty quickly. Let me just select it. You can just select the indicator right here, and I usually measure from the swing that I'm trading. So I'm looking at this swing on November 15, and then basically I'm just extended the swing all the way to the most recent price action. So what it does is that it calculates the point of control of the volume that we have been trading for that specific period in time. So as long as we continue to be above this point of control, meaning that the most traded volume was around that level, I'm continuing to see to the upside, right? That's pretty simple psychology in the market. That means that anyone who's trading this particular swing right now is making money in average. since most of the participants have participated at that specific price. So something that you can use as well is actually a pretty simple indicator. I will commit myself to do an educational video on that indicator so that you can also watch it. I will see if I have some time this weekend, and I can make some time this weekend to actually make a video for that indicator. So that's what I'm seeing in the SPY. I'm looking for more upside, looking for 410 plus, and then just take a look at the NASDAQ Composite. And the NASDAQ Composite has a little more work to do, but the positives here are kind of the same, right? We have a squeeze going all the way to the upside. You can see that momentum continues to base. We haven't seen any significant breakout, but we are above that 50 level. We have an active buy signal. We're above that 200, rising 200 hourly, and we're also above that 21 exponential. And this is actually something really important, is that we actually held last week, we held that rising 21 exponential. So that's pretty bullish, right? If you just want to keep things pretty simple, you can set a stop right below this 21 exponential and see if the market wants to extend all the way to that 1272 extension, Fibonacci extension. But ultimately, I'm looking for the market to retest this decline in 200 hourly in the NASDAQ Composite, and that probably is gonna come with the 0618 Fibonacci retracement. Once again, this Fibonacci retracement, pretty simple retracement, is just a retracement measure from this high right here all the way to this low right here, and we have that level of resistance somewhere around 12,000. So that's basically the levels that I want to share with you guys. I think that we have to continue, as always, keep things pretty simple. We don't have to read every document on the Wall Street Journal to understand what's happening in the market. We don't have to read all the news to understand what's happening in the market. We don't have to do any of that. We just have to follow price. And when we follow price, the only thing that we have to do is, okay, what's the next level of resistance? What's the next level of support? If I'm long, my stop is going to be below that support. And if I'm long, my target is going to be at that level of resistance. That's everything that we have to do as traders. We have to keep things pretty simple. So once again, thank you so much, guys, for watching the video. Remember to like and subscribe once again, and also follow me on my Twitter account. I'm going to link my Twitter account in the description so that you can find me pretty easily. Thank you so much, guys, for watching. Let me just check that I don't have anything missing. And that was everything that we need to cover. Thank you once again, and see you on the next one. Bye bye.